Can you hear me? Good evening. Good evening. Can you hear me? Okay. How was your day? Um, Also, I believe you can see my screen too. So I'm going to be sharing my full screen so that we'll just kick off straight away. Um, mm, okay. Can you see my screen? Let me know if you can see my screen. Let me know if you can see my screen. I'm sharing my screen right now. So let me know if you can see it. I'm waiting for you. Are you here? Okay. You just replied. We are now having network issues though. So we did quite some stuff on Monday. We saw the market trends, that is the uptrend and downtrend. We saw the Regis bucket and the Shopee bucket. Then we went on to see support and resistance. So today we'll be going further. We'll be going to candlestick patterns, and we're going to be looking at, let me write out what we're going to be looking at today. So we look at the pin bar, we look at the doji, we look at pin bar, doji, engulfing. We also look at the, although I don't like teaching this, so but let me just put it there because it's, and looking for the examples are kind of difficult. So that's why sometimes I skip it because they really appear on the chart. I'll look at the more star pattern. So these are the the candlestick patterns that I trade. What I normally trade though is pin bar, doji, engulfing, and star. I don't really trade the tweezers top and bottom because I rarely find them on the chart, so I don't trade them. But these are the candlestick patterns that I trade. Okay, so I believe by now you should be familiar with the concept of bullish and bearish. Bullish when the market is going up, bearish when the market is coming down. So you should be familiar with that by now. So everything that I'll be teaching you right here, the pin bar, the doji, the engulfing, the tweezers top and bottom, and the star pattern, they all have bullish and bearish. You get, so they are all have the bullish form and the bearish form. You just need to know when it is bullish and when it is bearish for you to take your trade. So everything has bullish and bearish. For the pin bar, it's like this. I'm going to be doing a lot of drawings too, so A pin bar is such that it has a small body. Let me. I believe by now you should have understood the concept of candle. If not, I let me just teach it before I continue. So a candle, there are three type of charts majorly. We have the bar chart, we have the line chart, and we have the candlestick chart. So my chart is already um on candlestick. So let me change it to line chart so you will see. So this is what the line chart looks like. This is what the line chart looks like. Let me change it to bar chart. So this is what the sorry, let me change it to bar. So this is what the bar chart look like. But what gives us more information, what gives trader more information in the market is candle. Like the candlestick will give us more information than the line chart or the bar chart. So that's why you see most of the time trader works with the candlestick you get. So a candlestick is such that it has a body. Let me draw the body. A candlestick has a body like this. So this is the body of a candlestick. Then it has a shadows or wick. So it has the upper shadow and it has the lower shadow, just like a wick. I believe you can see them in the chart as it is being displayed. So this is the body of a candle. So like I said before, they can either be bullish or bearish. Okay. So for a bullish candle, it closes above where it opens. So for instance, the candle opens at this bottom and it closes at this top. This is called a bullish candle. Let's say it opened at $1 and closed at $2. That is a bullish candle. Peradventure, it opens at the top and closes at the bottom. That is a bearish candle. So let's say it opened at $2 and closed at $1. That automatically makes it a bearish candle. So most at times it is denoted in red and green. So you can easily deduce that the green candles are the bullish candles while the red candles are the bearish candles. You get? So hope you are following me. That is how it is. That is how a lot of people set theirs. Me, that is how I set my charts. So some persons use the black color and the white color. So mine is the green candles are my bullish candles, whereas the red candles are my bearish candles. Hope this is clear. Let me know if you get that so that we can continue. Please, I need your response. I'm waiting for your response if I can continue. Okay, so let me continue. So we'll be looking at the pin bar. This is the first one we'll be looking at. So a pin bar is such that it has a very small body. However, it has a long shadow or a long wick. So I'm going to be drawing that. So this is an example of a pin bar. Small body like this, but a long wick or shadow. This is a pin bar. Other persons, sometimes it is also called armor. So some people call it pin bar, other persons call it armor. So whatever floats your boat is okay. So when the shadow is facing down, like when the shadow is down, it is a bullish candle. It is a bullish pin bar. However, when it is up like this, the one I'm drawing now, it is a bearish pin bar. So this is the first one I drew here is the bullish pin bar, while the second one I drew here is the bearish pin bar. So what does this do in the market? What do they indicate? Now, when you see a bullish pin bar on a support, it's telling you that prices are going to reverse into an uptrend. So this, we know the last time we had a class, we were talking about the uptrend, the downtrends, and all of those stuff. So these are the stuffs that tells you that a trend is about to change from an uptrend to a downtrend, or from a downtrend to an uptrend. So when you see this, like this bullish pin bar, and it is formed at its support, it's giving you the notion and the indication that the market is going to start going up. It's going to be an uptrend. So what you do at an uptrend is to place a buy order. Hope this is clear enough. Then for the bearish pin bar, it's telling you that when it occurs at a resistance, please mark the terms I do use, because people get carried away in the sense that they just see a bullish pin bar and start trading without answering the necessary question. So you need to ask yourself, where is this bullish pin bar formed? Where is this pin bar formed? Is it formed at a resistance or at a support? If a bullish pin bar is formed at a resistance, that pin bar is invalid. It is, don't just ignore it. Okay, it is invalid. It won't carry weight. Okay. So if a bearish pin bar is formed at a support, is invalid. Don't 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 pay attention to it. Don't use it as an indication or as a signal. So a bullish pin bar is a must. It must be formed at a support, whereas a bearish pin bar must be formed at a resistance for it to be valid. For it to be valid. So I'm going to be going through the chart so that we'll see some examples. Mm, I'm seeing one here, though it's kind of small, but I'm going to expand my chart so that you see it clearly. So there is a bearish pin bar that was formed at this resistance. If you can see my chart properly, you can see, if you can s- I said a bullish pin bar must be formed at a support for it to be valid. A bearish pin bar must be formed at a resistance for it to be valid. So if you see a bullish pin bar at a resistance, it is invalid. You don't trade it, you don't take it as a signal. If you see a bearish pin bar at a support, it is invalid. You don't count it or consider it as a signal. Hope is clear now. Are we good? So I'm going to be I was showing you this example. This is a bearish pin bar. Now, one thing you want to also note that when it comes to pin bars or hammer, the color doesn't matter. What matters is the wicks, where the wicks are positioned. Are they positioned in a upward way or in a downward way? So if the wicks are up, like upward, is a automatically a bearish pin bar regardless of its color. If the wicks are downward, it is automatically a bullish pin bar regardless of its color. You get, that is one thing about pin bar. So color doesn't work with pin bar. What works is just the position of the wicks. Sorry, excuse me. Okay, so I was showing you this example. This was a bearish pin bar that was formed there, and when it was formed, it was actually the beginning of a downtrend. When it was for market, you see also that market was actually going up until this pin bar was formed and market started coming down. So what you do in this situation is to place a sell order after, please, after the pin bar has been formed. Sometimes trader gets carried away by the formation, like doing the formation of the candle, because this candle may be forming and it wasn't looking like a pin bar until it has finished forming. That's when it was like confirmed that this is a pin bar. So you have to wait after, the candle has been formed before you can make your conclusion that it is a pin bar or something else. So when after it is formed, you look at it, and when it's confirmed that it's a pin bar, what you do is to place a sell order because this is a bearish pin bar. So let's look for examples of bullish pin bars. So I've seen a bullish pin bar. Here it is. This bullish pin bar. I see that the body is small, the wick is very long, and it's facing downwards. Since it's facing downwards, that makes it a bullish pin bar. You can see that after it was formed, market started going up continuously. Market just started going up just like that until it got to a resist, even broke above a resistance and formed a new one, and market continued going up. So when you see this pin bar that is from a bullish pin bar, what you do is to place a buy order. What you do is to place a buy order. Okay, so let's look for other examples. Let me go to another chart. Okay, I've seen a bearish pin bar that was formed here. Look at this one, a bearish pin bar formed here, and market just started dropping. Just like that, market started dropping. So what you do is to place a sell order. I want to look for another example. Let's see this guy. Mm, okay, I'm not seeing a good example to use. This guy. Mm, mm, mm. I'm not seeing a pin bar. This one is okay. I've seen one. Look at this bearish pin bar that was here. Recently, it was from market just started dropping, and it was actually formed at a resistance. Though it was just dancing around the resistance before the pin bar was formed and market actually dropped. Okay, another thing you want to know that this any all the strategies I'll be teaching you, they can occur on any time frame. When I mean any time frame, it can be in a 1 hour time frame, 2 hours, 4 hours, daily or weekly. So they can occur on any time frame and they will still be valid. So I just saw this two now. This is a bullish pin by here. Another one was from here, which I call a double confirmation, and market started going up. Okay, so this is what a pin bar looks like. Please, if you have any concerns, let me know. Is this pin bar clear? Is this pin bar clear? Let me know before I go to the next one. Let me know. I'm waiting for your feedback. Are you there? Okay. Okay, let me explain again. So I was explaining a pin bar, and I said that, the pin bar is such that it has a small body and a long wick. It has a small body and a long wick. So the body is, let me draw the body, just tiny, small, nothing big. Or let me say the body is smaller, is always smaller than the wick. Why is my hand going there? The body is always smaller than the wick. So we have a small body here as the body of the. So look at the shadow. You see that the shadow is very long. Unlike, okay, let me show you normal candlesticks. I think let's start from there. Normal candlesticks is such that they have a long body and small wick. So if you can see these guys properly, you see that the bodies are long, but the wicks are small. Bodies long, wicks small. Bodies long, you can see that they have bigger bodies but smaller wicks. You get? But in the case of a pin bar, it has a small body but longer wicks. It has a long body and a sorry, it has a small body and a long wick. That is how a pin bar is. Okay, so what it indicates is that wherever the wick is, like wherever the wick is, the wick can either be facing up or down. So if it is a wick that is facing up, like it is upside down, let me put it that way, like something like this. Let me expand this shot so that you can see it properly. Look at this now. Look at this is a pin bar. The body is small, flat, but the wick is long. So since the wick is facing up, it qualifies it to be a bearish pin bar. Since the wick is facing up, it becomes a bearish pin bar. You understand? And a bearish pin bar is an indication that the market is going to start selling. Anything bearish at all, let's just put it that way. Anything bearish is an indication that the market is going to start selling. Anything bullish is an indication that the market is going to start buying. So for the indication that market is going to start selling, what you do is to place a sell order. An indication that market is going to start buying, what you do is to place a buy order. I believe this part you get it, like you understand it. So this is a bearish pin bar. The wicks are facing up, the body is down, so it's a bearish pin bar. However, this is a bullish pin bar. The wicks are facing down and the body is up. So I know that the colors are aligned in this case, like the bullish pin bar is showing having a green color, while the bearish pin bar is having a red color. However, it is not always like that, because sometimes a bullish pin bar can have a red color while a bearish pin bar can have a green color. I said it before that what matters in the pin bar is the positioning of the wicks, is where the wicks are positioned, either upwards or downward. Is it clear now? Let me know if it's clear now. Are we good? Good. Bye. Okay. Since you it's clear now, The next we'll be looking at is the doji. Next thing we'll be looking at is the doji. So the doji has a very flat body. You know, for the pimba have a small body. However, doji has a flat body. So for doji, you have something like this. You can have something as flat as this for doji. This is a doji. It's like a plus sign, your normal plus. This is simply what doji is, normal plus. However, there is the bullish doji as always and the bearish doji. So the bullish doji is like this. This is a bullish doji. The bearish doji is like this. This is a bearish doji. So like the pin bar, the bullish is facing up. That is the the body is facing up while the wick is facing down. While the bearish doji, the wick is facing up while the body is facing down. Hope you is this part understood before I start giving examples. Do you understand the doji? The one that is at the middle is, I call it neutral doji. It's neither bullish nor bearish because it's just at the middle, it's flat. It's a plus sign. However, the ones by the side, this first one is a bearish doji, while this second one is a bullish doji. So for a bearish doji, once it appears at its resistance, it indicates that the market is going to start selling. It appearing at a resistance indicates that the market is going to start selling, while it appearing at a support indicates that the market is going to start buying. Please let me know if you understand this part. I'm fast in explaining. Wow. And I'm thinking I'm moving very, very slow. I'm trying to be as slow as possible. Wow. Okay. I was saying that this is a doji has a flat body. A doji has a flat body, and a neutral doji is like a plus sign, plus addition sign, plus sign. This that is a neutral doji. This is the one at the middle. However, we have the bullish doji and the bearish doji. The way same way we have the pin bar that wicks are facing up for the bearish pin bar and wicks are facing down for the bullish pin bar. The same thing we have in the doji is just the same thing, just that the structure is different. The structures are different, but the functionalities are the same. So this one I'm like pointing to right now that my mouse is on is a bearish doji. The wicks are facing up, but the body is flat. Wicks are facing up, flat body that is facing down. This is a bearish doji. What it indicates that the market is going to come down. So for instance, let me explain further. So for instance, the market was like in an uptrend before. Then this doji forms. The next thing you see that the market will start coming down. You get. But let's say this now is a bullish doji. Market was on a downtrend before and it gets here and a doji was formed, a bullish doji was formed. What you see that the market will start going up. Is it clear now? Is it clear? Is it clear? Okay. So let me continue. So the next thing will be doing is that I'll just go through my the chart so that we see examples of what I was explaining. So the examples we are looking for now are doji. Those are the examples. Okay, look at one here. This is a bearish doji, wicks facing up, body facing down. The next you see that I didn't get that. Are you going off the call? Are you still there? Let me know if I can continue. I'm seeing your comment. Just a minute.
There are two places I don't want to go in 2026. That's back and forth. I have seen people do Thanksgiving. Somebody sent me this tweet and asked me to check this out. It says, a friend lost his job and had to pay but he fed him how to night. So one night he said his flight was the next morning, just like that. Thanked me for everything and left. I went to work the next day. Funny, life was going through a week later. He finally took, when he said he finally picked up, that he didn't call that used he tried to chat. He finally picked up. Said he was fine. He had arrived in West. That was 3 years. No calls, no messages. I have never felt betrayal in my life. Felt not enemies. See, I didn't want to say anything on this. I didn't have any comment until I read the phone. This person replied to me that said, maybe this is not betrayal. This is entitlement. Because you helped him doesn't mean he should disclose his next most important step in life. He thanked you for everything. That is okay. Let me get into it. It's a very thin line because this person that replied is now we think that they have come. But there's a very thin line between setting boundaries for your privacy and blatant disregard for your life. Especially when those people have been nothing but helpful to you in times when you needed it. For 9 months, nobody knew you were your needs. Then you tell them you are next, even ordinary broke next month are going for more and not friends. Or even next week you that you left 3 years. That's why I tell you reach out for the kind of respect. And it's unless somebody the person never knew this thing. Now I know we talk a lot about building independence. While we are working towards that and building ourselves, it's also very important that we don't lose track of our interdependence because we always need each other. Boundaries and privacy are important, yes, but money bridges and hurting people who are not what we are to render be affected. It's not wisdom. All eyes on me. I'm on fire. All eyes on me. Oh, no.
Okay, so let's continue. Um, I was I was trying to give examples of um excuse me, trying to give example of this doji, and I was pointing at this bearish doji that was here before you went off the call. Before you went off the call, so see that market was actually trading up, but then a bearish doji was given here, and the next thing was that market started dropping, and it dropped very well. So in a case like this, when you see a doji at a resistance, what you do is to place a sell order, and you place your stop loss above, like not exactly where the wick ended, but above it. Place your stop loss above where the wick ended. So this is how to trade a doji. Let me look for bullish doji examples. Examples of bullish doji. Can you hear me? I've started talking. Like I started talking. I think you should take your this thing forward to live. So I'm trying to get examples of bullish doji. Trying to get examples of bullish doji so that we have a balanced view of everything. Have you caught on? Please let me know if you are actually where I am now, because since that you didn't take it to live, you're supposed to move it forward to live. Okay, okay. So let me look for examples of bullish doji. That's what I was trying to look for. I was trying to look for don't know why I can't find any. hmm Look at this two here. One, two, and market starts going up. So when you see a bullish doji at a support, you place a buy order. When you see a bullish doji at a support, you place a buy order. Is it clear? Let me know if you got it. Do you is the doji clear enough for you? Okay. So the next we'll be looking at is the engulfing bar pattern. The engulfing patterns. Now you will notice that these first two that we looked at, they are just one candlestick. However, the remaining ones we'll be looking at, I've moved this stuff. The remaining ones we'll be looking at are not one candlesticks. There are two candlesticks. So you have something like this: two, first candle, second candle. So this is what an engulfing look like. Two candlesticks that are formed together, like the first one was formed, there's the second one formed, and the second candle that was formed totally covers the first candle. The second candle that was formed totally covers the first, or let's say it's bigger than the first candle. I think that's the appropriate word to use. The second candle is bigger than the first candle, so that's what makes it engulfing pattern. So, like always, we do have the bullish and the bearish. So for the bullish engulfing pattern, the first candle that will be formed will be a bearish candle, that is a red candle in this case. The first candle that will be formed in a bullish engulfing pattern is a red candle, while the second candle that will be formed in this bullish engulfing pattern will be a grey candle, that is a bullish candle. So when a bullish engulfing pattern is formed, what we're expecting is that the market is going to start buying. When a bullish engulfing pattern is formed, what we are expecting is that the market is going to start buying. This is how it is. This is how it is. So this for a bullish engulfing pattern. However, the bearish engulfing pattern is the opposite. So the first candle now in a bearish engulfing pattern is a green candle, while the second one is a red candle. When it is formed, market is going to start selling. So let's say the market was going up before, and there a bearish engulfing pattern is formed, the market will start coming down. Market will start coming down. So you understand better as we are going to be looking at some examples. So normally we just go through our chart and we are going to be seeing some examples. So let's see. This are let me just delete this stuff, so I keep moving them away from their positions. Let me delete. Okay, I've seen one. Let me expand my chart so that it will become bigger. So you see that market was actually coming up, like the market was in an uptrend, but then a greenish candle was formed first, and after it was formed, a red candle was formed second. The red candle was bigger than the green candle, and the next thing you see that market just started dropping. This is a bearish engulfing pattern. Let me cycle it. Let me I so yeah, this is a bearish engulfing pattern that was formed here. So the first candle that was formed was a green candle. The second candle that was formed was a red candle, and the red candle was bigger. Red candle was bigger than the first one, than the green candle, which made it a bearish engulfing bar pattern. So the next thing you see that market just started dropping, just like that. Market started dropping and it just continued dropping. So what you do is to place a sell order and put your stop loss a little above the candle that was formed. Excuse me. Okay, so the next example we'll be looking at for is the bullish engulfing. Let's look for a bullish engulfing pattern. Like I said before, it is in all time frame. You can find this pattern in 1 hour time frame, 2 hours, 3 hours, 4 hours. So just like that. So I've seen an example of a bullish engulfing pattern. So first of all, we saw a small red candle that was formed. Then the second candle, a green candle was formed, and you see that market just started going up. Market just started going up like that. So in this scenario, what you do is to place a buy order. In this scenario, what you do is to place a buy order. Is it clear? Like what are this engulfing, is it clear enough? Let me know if it is clear enough so that let me know. Do you understand the engulfing, bullish engulfing, bearish engulfing, and I should explain it again. Okay, I'll do that. So I say that the engulfing pattern are two candlesticks that are formed simultaneously, they are formed together. One will be formed first, then the second one will be formed. Just that the second one that will be formed is always is a must. It must be bigger than the first one. If it is not bigger than the first one, it is not an engulfing pattern. You get, it must be bigger than the first one. So for instance, we, like I've always said, there is the bullish and there is the bearish in every strategy, in every pattern. There is the bullish side of the pattern and the bearish side of the pattern. Now for the bullish side of engulfing pattern, the first candle that will be formed is a red candle. The first candle that will be formed is a red, mark the words, red candle, whereas the second candle that will be formed is a green candle. That is for the bullish engulfing pattern. That is for the bullish engulfing pattern. So when it is formed, what we expect the market to do is to buy. When it is formed, what we expect the market to do is to buy. That is just what it is. So what we do is to place buy order. Is it clear? Did you get that? Let me let me let me know if you get that first before I take on some the next one. Did you get that? I just explained bullish engulfing pattern before I explain bearish engulfing pattern. Okay. So for the bearish engulfing pattern, which should indicate a sell, the first candle will be a small green candle. The first candle will be a small green candle, while the next candle will be a big red candle. That's for bearish engulfing. So when that is formed, what we expect is that market is going to start selling. So what we do is to place a sell order. Is this one clear? I'm waiting for your response. Is this is the bearish engulfing clear? See, everything is just like what's an opposite. One is the opposite of the other. Okay, the bullish is the opposite of the bearish. The bearish is the opposite of the bullish, just like that. Okay, so I was giving this example, like this one now that is here. This first candle is a red candle. The second one is a green candle. The green candle is bigger than the red candle, making it a bullish engulfing pattern. So what we are expecting is that the market is going to buy, is going up. So this is exactly what happened here. the market just started going up, just went up until it gave a, this is a pin bar now, it gave a bearish pin bar, it started coming down again. It got here, gave another bullish engulfing. Let me expand the chart so that you see the bullish engulfing. This first candle is a bearish candle. The second candle is a bullish candle that totally covers this one. And market started going up again. So you see how it was just going up and down by the formation of the candlesticks. It came here, gave a bearish engulfing pattern and a bearish pin bar, and it started coming down again. Hope you are seeing it, like everything I'm saying now is not, it's not confusing to you. I'm just trying to see how you are seeing different candlestick patterns in a chart, and the market is respecting all of them as they are formed either in the line of the resistance or at the support region. Hope it's clear. The examples I showed just now, are they clear enough? Are my examples clear enough? Okay, so the next we'll look at, I don't want to bug you with the tweezers because number one, is almost like the engulfing, so it may be confusing, and it is, honestly, it is difficult to locate. It barely happens, like it barely show up in the chart. So let's leave the tweezers. Let's go to the star pattern. Now the star pattern is three candlestick pattern. The star pattern is three. Like we saw, the doji and the pin bar, they are just single candlesticks. The engulfing, there are two formed together. But this star pattern is three candlesticks that are formed together. That makes up for the star pattern. So you have your first candlestick. Let me draw. You have your first candlestick. You have your second. This second can either be a pin bar or a doji, but it can either be a pin bar or a doji. So let me use a doji here. And you have your last candlestick. So this is what a star pattern is. Now this is a bearish star pattern. For a bullish star pattern, you have it like this. First candlestick, second candlestick will be at the bottom, not at the top. Then the last candlestick will be normal, the way it's. So you see, the first candlestick, for the bearish star pattern, excuse me, for the bearish star pattern, the candlestick, like the middle candlestick is at the top. For the bullish star pattern, the middle candlestick is at the bottom. Hope you are getting it clearly, it's not confusing. Then this star pattern, it comes with conditions of which I'll be listing them out. It comes with conditions, and I'm going to be stating the conditions that it comes with. So if any of the if one, even if it's just one of the conditions that is not met, it is not viable to trade. Don't trade it. Okay, even though it's just one of the conditions that is not met, don't trade it. So let me highlight the conditions. So for a bullish star pattern, the first candle must be a bearish candle. That is a red candle. I'll put in bracket red candle. So that is for the first condition. The second candle can either be bullish or bearish, but must be either a star. Let me, I don't, the thing has, let me take it. Must be either a pin bar or a doji. While the third condition, the last candle must be bullish. We get. So for the bullish star pattern, we know that it's three candlesticks pattern that are formed together. First candle must be a bearish candle, that is a red candle. The second candle can either be bullish or bearish, but it should be a pin bar or a doji, while the last candle must be a bullish candle. So if the last candle is a red candle or a bearish candle, it is invalid. Don't trade it. That is not a star pattern. That is something else. If the first candle is a bearish candle, is a bullish candle, is invalid. So if the first candle is a bullish candle, the last candle is a bullish candle, that is not bullish star pattern. Please don't trade it. It's not. So let me for the bearish star pattern, first candle must be a bullish candle. Second candle can either be a bullish candle or a bearish candle. Why the last candle must be a bearish candle. Are you there? Do you understand this explanation I gave? This write up I did here. Are there? Do you understand it? Okay. So let's look for examples in the chat. Okay, I've seen one. Let me expand so that we look at it together. So we see that the market was in an uptrend, but it gave a bullish candle. That is a green candle, sorry. Then it gave this doji and then a red candle. This is a bearish star pattern, and the market started dropping. So what you do is to place a sell order, and you put your stop loss above the candlestick pattern. Place a sell and that's it. So okay, I've seen a bullish star pattern here. So market was actually coming down. Then this candlestick was formed. The bullish, a bearish candlestick was formed. Then a pin bar was formed here. Then a green candle was formed here. Market started coming up again. Market just started coming up. So what you do is to place a buy order here. Let me look for other examples. This was a quick trade. So you see a bearish pin bar here, a bearish candle here, a doji here, bullish candle here, and market just went up. So this can sell for a quick scalp. I think this should be up to 50 pips or thereabouts. Okay, okay, yeah. A bullish candle was formed. Sorry, a bearish candle was formed. A pin bar here and a bullish candle. And market went up. This is a bullish star pattern. Please, these examples that I'm showing you, are they clear? Are they okay? Do they do justice to the explanation that I gave? Let me know if the examples are clear enough. Okay, so um those the other candlestick patterns though, there is you see Arami, you see Maribuzu, you see three black crowns and three white soldiers. But one thing I've learned in forex trading is that you take things that are simpler for you. What do I mean? You don't bombard yourself with a lot of knowledge that you start getting confused. Okay, so if you have information overload, you will start making losses in the forex market. So that's why I've learned a lot of strategies, but I've streamlined my strategies to what I'm teaching you now, because I've noticed that any strategy you trade is profitable. So there's no point learning all the strategies and getting confused by all of them and make no profit. We are here to make profits, not to learn strategies. So the other candlestick patterns actually, but I won't be teaching you that because I do not trade with them. So it is what I'm trading with that is giving me profit that I teach my students. You get, so these are the candlestick patterns I trade that gives me profit. So we have learned about the pin bar, I've learned about the doji, I've learned about the engulfing, and we have learned about the star pattern. So they are going to be giving me two charts each on all the candlestick patterns we have taught. So one chart for bullish pin bar, another chart for bearish pin bar, one for bullish doji, another one for bearish doji, one for engulfing, bullish engulfing, another one for bearish engulfing, one for bullish star pattern, another one for bearish star pattern. So in all, you are going to be giving me 8 charts. That is your assignment for today. You are going to be giving me eight charts. So that is your assignment for today. Do you have any question, please let me know. Do you have any question? Okay. Okay, no questions for now. Okay, so if no questions for now, that will be all for this evening. The next Our next class will be on chart patterns. Our next class will actually be on chart patterns. On the we have different chart patterns that we still trade with. So in case Okay, the chart patterns actually go in line with candlestick patterns, but it's good you learn them too. So our next class will be on chart patterns. So that'll be all for now. Good night, good evening, and take care.